Hello traders, welcome back to the channel. This is Vishal and you're watching weekly sectoral analysis. You can see this weekly candle is now a big red candle after many months. Now the last big red candle was in October 2023, and after that we have seen a series of green candles. First we saw a couple of smaller candles, then the size of the candle started increasing. The trend started catching up momentum, and then again we saw some consolidation and again this severe sell-off thanks to private banks, especially HDFC Bank. Now many people, when they are looking at the daily and the weekly time frame chart, one thing we need to be sure of, that the trend is still up in the weekly time frame chart. In the daily time frame chart, the trend is flat, and in the hourly time frame chart, the trend is currently flat, but the momentum seems to still be on the downside. Generally, when the trend and the momentum is different in all the different time frames, we saw that weekly is showing something else, daily is showing something else. This is generally not a very good time to make money, and probably to little bit pause down your trading. We can also understand that currently result season is going on, and when generally result season is going on, we'll see many gap up, gap downs in stocks due to good or bad results. And again, in the next month we have the budget coming up, so consolidation, correction, maybe a rise in the market. But all this activity which will be happening in the market, it will be all of a sudden. It could be fast, it could be volatile. So making money is not going to be easy for probably a week or maybe next 10 days. As a trader, I would like to pause down my trading to a considerable level. This was a very good time to make money when the markets were rising, but now it seems to pause down your trading is the right thing to do. When this correction happened, we saw that the prices did bounce back from this 23.60% Fibonacci retracement. And if someone is assuming that this is a hammer candle or this is a hanging man, well, according to me, neither it is hanging man, neither it is a hammer. It is just a big red candle with a wick on the downside, which is saying that there is a considerable amount of support at 21,350, 21,360. Now, if you have a look at the daily time frame chart, I'll just try to magnify this. We can see that the prices are consolidating. First, we had a gap down, a severe sell-off. Then the second day, a gap down, but again a hammer. And I had shared this support level in my previous Nifty and Bank Nifty short-term view. So from there, 21,350, we saw a bounce back till 21,700. So 350 points of bounce has already happened from the support which I shared with all of you. And then suddenly after that, we have this bearish engulfing pattern. So I think prices are all over the place, and sometimes it makes sense to avoid all these candle patterns which are visible in the daily time frame chart, because a person get confused. First inverted hammer or a shooting star, then a hammer, then a doji, then a big red candle. So what we should understand, is it bullish or bearish? Well, it's nothing but it is consolidating so far. What will happen ahead is possibly needs to be seen. Well, in extreme short term, this is the first support, 21,550. And if we crack below 21,280 on a closing basis, then yes, it could be probable that prices will try to, try and hit somewhere over here, 21,000. That's pretty much possible. But we need to first close below this convincingly. This low is a very important support. If this low is not broken, possibly markets will keep going up. Again, they will come down. Some sort of consolidation might continue in the next few days. Now, Bank Nifty. Bank Nifty is at an interesting zone in terms of trend. Yes, the trend is flat in the weekly time frame chart. The trend is down in the daily time frame chart. But in terms of support, we can say that this entire zone, which I've mentioned in my previous video also, from 45,933 or 45,950 in this zone of 45,000, somewhere over here, this entire 1,000 points or little bit less than that is a support band. Well, you might think that how can an entire band of close to 900 to 1000 points of support band can be a very important support band. Yes, my analysis says so. And if you have a look at the daily time frame chart, we can see again, just like Nifty, we had a gap down with a big red candle. This is a big red candle with a wick on the upside, which is a shooting star. Once again, a shooting star, then a big red candle, and suddenly a hammer all of a sudden. Okay. This is due to this particular support. Now, if you have a look at the weekly time frame chart, we can see that we do have some sort of consolidation going on over here, and we are at a support. So if Bank Nifty tries to pull back, I will not be surprised. And in case if Bank Nifty wants to go down further, it needs to close below 45,000. And even if it wants to close below that, I guess first, just due to the reason that Bank Nifty is extremely overstretched. You can see the levels over here. It was at 16, currently it is at 34. And now we also have a positive divergence in Bank Nifty. So some sort of consolidation or a pullback in extreme short term cannot be ruled out. All right. But will it transform into a full-fledged pullback, and then that pullback will transform into a trend or not? That only time will tell. All right, because in a bull run, it is very much probable that as soon as market starts dipping, people try it and jump in into the the dip, and then they start buying. But as a trader, I would like to be slightly conservative, and we also need to understand that a lot of result season is going on, and then a budget. So whatever money we have made in this uptrend, which was some sort of easy money, should not be lost at a point of moment in the market when making money is not so easy, right? PSU banks. Now, PSU banks are looking completely different from the charts of private banking, because PSU banks are into a very strong uptrend, especially looking at the weekly time frame chart. In the daily time frame chart, yes, there was some sort of zigzag moments, but nevertheless, there is no reversal visible as of now, and it's probable that the momentum will continue on the upside. Private banking pack. Well, thanks to especially HDFC Bank, due to which we had a crack. And I guess we are at a support zone. If we close below this support of 23,374, yes, we can have a crack. But looking at an extreme short-term time frame chart, which is hourly time frame chart, it does suggest that it needs some sort of pullback or a consolidation. In fact, a pullback will be more nicer, not because I want to see the Bank Nifty go up, but you can see the RSI is clearly saying that, right? But again, it needs to be confirmed from the price movement. Energy pack, we can see that in a strong uptrend, RSI is at 87. The trend is continuing on the upside in the daily time frame chart also. Well, as a trader, if I want to initiate new positional trades in this particular sector, I would not, because this is not the right time to enter the sector. I guess when this breakout was happening in this zone, when in the starting or the mid of November, that was the right point of time to enter into it. But yes, if this sector dips considerably in the daily time frame chart and then starts going up, then as a swing trader, I would like to fix my eyes on this. But as of now, if you're holding any stocks in this particular sector from lower levels, you can continue to hold them with a trailing stop loss. New positions at this juncture, I guess it would not be advisable. Metal pack in a strong uptrend in the weekly time frame chart. In the daily time frame chart, it is not looking that interesting. It is looking lackluster, and it is also consolidating and sideways. But if you have a look at the hourly time frame charts, there is one thing which is interesting, that the prices have been able to bounce from this 161.01% extension. Yes, they cracked below the support, but the pullback was immediate. And when generally the pullback is immediate, it means that support was important. Any sort of upside momentum visible in the shorter term time frame charts will allow the stocks in the metal pack to rise on the upside. Auto pack. Well, in auto pack, what we can see is in the daily time frame chart, there were some signs of slowing down of the momentum, and that is what we have seen. We can see that the prices have gone up very, very slowly. They have gone up, but it's like slow and steady consolidation in comparison to this fast uptrend in the daily time frame chart. I guess if we convert this particular chart into a line chart, we can again see a negative divergence between the price and RSI. So yes, momentum continues to be slowing down, and not many stocks are visible as of now in the auto pack, which looks very, very interesting. But yes, as a trader, you can fix your eyes, as a positional trader, you can fix your eyes on this particular stock, which is Maruti. You can see the stock is trying to bounce back from a very important support, but this is not the time to buy. It needs a very, very strong breakout in the daily time frame chart, right? Finance pack. Now, finance pack, you can say that it's looking very, very similar to the private banking pack. In a strong uptrend, a dip near the support band, close below this low will lead to some lower levels with a big red candle. But since this fall was very sharp and one way on the downside, a pullback, a short-term pullback or a consolidation cannot be ruled out. Consumption pack. In consumption pack, you can see that initially the rally was very, very strong and fast. And in the last 2 to 3 weeks, prices more or less have been consolidating. And as a trader, as a positional trader, you can continue to hold your holdings, which you might have entered in the early or mid-November. But new trades in this particular pack as a positional trader is something which I would not like. As a swing trader, yes, I would wait and watch. If prices come down drastically in the daily time frame chart, then I can fix my eyes on this sector and select one of the stocks from this sector. FMCG pack. FMCG pack in a decent uptrend on the upside and suddenly decides to come down. As we know, the result seasons are going on, and you can see a hammer, a decent green candle, then a red candle. So you can see prices are all over the place, and it seems that some sort of consolidation is going on in the FMCG pack. In the weekly time frame chart, things are pretty much okay. I guess any sort of support taken from this level could lead to a bounce back in the weekly and in the daily time frame charts, but you'll have to keep a lot of patience. All right. Infra pack. Infra pack seems to be looking strong in the weekly time frame charts, but it is overbought and overstretched a little bit. It's more overbought rather than overstretched actually. And the weekly RSI is at 86.87. In the daily time frame charts, we can clearly see that we do certainly have a negative divergence. But as I repeated in my last video, that in a bull run, many times the trend is more stronger than the momentum, because even earlier we did had signs of negative divergence, but the prices kept on rallying. So reversals will only work when they want to, and it's very difficult to predict as of now till the time momentum is continuing on the upside in the infra pack. You can continue to hold your stocks from lower levels with a trailing stop. But as a swing trader, I would surely like this sector to come down a bit at a lower level. And when the risk reward is favorable, I would like to keep an eye on these stocks. IT pack. IT pack in the weekly time frame charts, things are okay in a strong uptrend. But in the daily time frame charts, due to this result season, this sudden gap up, sudden rise in the volatility has led to some sort of distortion of the charts. Maybe if the prices consolidate a bit and the distortion of the chart goes away, then some real idea about this sector will be seen. Yes, but any crack below this 35,674 could result into small profit booking on the downside. This small, not a large. Okay. Pharma pack. Pharma pack in the weekly time frame charts continue to look stronger, and you can see that small dip was visible in the pharma pack, but it immediately tried to pull back itself from the 23.6% Fibonacci retracement. As of now, it's probable that the trend will remain up in the weekly time frame chart, but in the daily time frame chart, needs to be seen what happens. More stronger possibility of a sideways movement is visible. One stock has given a decent breakout in the last few days was Cipla, has given a ascending triangle breakout on the upside. You can see the higher lows, but do not forget that we do have a result on 25th of Jan, which is possibly just few days from now. So how will it react on that day is a totally different scenario. Okay, so I don't want to comment on that, but overall as a breakout, it's looking fine. Now, what happens on 25th Jan is a complete surprise. Okay, and we need to understand, as a short-term trader, I generally try to avoid stocks which are going to see its results in next few days, maybe in next 4-5 days. I would like to avoid them. PSE sector. Now, PSE sector, we can see that the trend is strong. The trend is up. The RSI is at 91. In the daily time frame charts also, we can see the price is in a strong uptrend. If I'm holding stocks from a lower level, I would continue to hold them with a trailing stop loss, but newer positions in this sector as a positional trader, I would like to avoid. As a swing trader also, I would like to see some sort of correction in this sector. Only then I can re-enter into these stocks in this sector on the upside. Real estate pack. Real estate pack continues to be looking strong in the weekly time frame charts. Well, RSI is at 83, 84, weekly RSI more so ever. And you can see that the prices have gone more than 423.6% extension on the upside, and even furthermore likelihood of the prices to go higher is possible. But before that, looking at the daily time frame charts, it's possible that it might consolidate first, and after that consolidation, if it doesn't break some major level, then yes, you will see a rise in that particular sector. Mid caps. Now in mid caps, what we can see, price is going on the upside. Trend is more stronger than momentum. In the daily time frame chart, the trend is stronger, the momentum is weaker, and what we can see is higher high in price, lower high in RSI, but this was visible even in this zone. But what happened? Price continued on the upside. So again, as a trader, as a positional trader, I would not like to enter into the mid cap stocks as of now. Before a significant correction in price or maybe a significant consolidation. Individual stock picks is a different thing, but as a sector as a whole, I would like to, just continue to hold my lower level holdings which I have, but newer trades I would like to refrain. As a swing trader also, I would like the prices to come down a little bit where the risk reward ratio is favorable. All right. And summing it up all, we need to understand that we are into a result season. Prices are overstretched, markets are overbought, and plus we have a budget coming up. Not a very good recipe, not a very good time in markets to be aggressive, to make money. It's time to, and I have been repeating this probably in my last few videos, probably it's time to save your hard-earned money which you have in the last couple of months. Yes, in doing so, you might lose maybe one or two good trades, but as a trader, it's always a give and take in the markets. Like if you miss probably one or two good trades, you could also save money in the next 2 to 3 trades, which you might initiate, and it could, result into smaller stop losses. All right. So I'm just sharing my personal view regarding the overall market regarding Nifty. It's up to you how to take up these thoughts. And if you find this video has been helpful, try to share this video with other traders as well. Trade less, trade wisely. Thank you.